If you're looking to buy, sell, or invest in condominiums in South Florida, you need to know what's going on in the market, because a law just got passed back in May 2022 that is going to affect you whether or not you like it. And it's going to affect you in a big way. So the bill's called 4D, and 4D requires condo associations to basically have reserves in the bank, and they're not allowed to waive reserves anymore. That era is done. And they're required every 10 years to conduct a reserve study. What is a reserve study? Well, a reserve study is done by an engineer and architect. Well, they'll go to a building, they'll check the structural integrity of the building, basically give you an assessment, an estimate of how much it costs to fix and required things that need to be done, whether the roof needs to be replaced, the plumbing, etc., the floors, all that good stuff. Well, in the past, condo associations would kick the can down the road. They wouldn't want to handle that. Why? Because that means that association fees have to go up for everybody. So think about it like this. If you live in one of these big buildings, let's say the roof costs $1 million to replace. Now divide that $1 million to every single homeowner in the building, and let's say divide that over the next 10 years. That's what they're gonna be having to pay until that is paid off. So keep that in mind. Now, a lot of them kick the can down the road and say, hey, we're not going to do a reserve study. A lot of them don't even do reserve studies. And a lot of them don't even have reserves in the bank for unforeseen events. So if you buy a condominium and all of a sudden an issue comes up with the roof, well, and you don't have the money, everybody has to pay an assessment immediately. So having these reserves, it's going to be great because you're going to have that excess money in the bank to cover for these unforeseen or for these required maintenance. And the bill was essentially passed because of what happened in Surfside when the building collapsed. You see, there was a lot of things that could have been avoided, a lot of things that presented itself in the building where if the association had the money and had the means to pay it, they would have done it, and that whole catastrophe would have been avoided from the beginning. So that's why this bill was even established in the first place. Now, what happens in the sense of affordability? A lot of these condominium owners who have now wanted to pay these reserves and pay this increase are now forced by law by 2025 to pay for these reserve studies and pay for the maintenance that needs to be done in these buildings. That's going to create a tremendous financial burden for those that are on a fixed income or who are retired and who are unable to absorb that increase in pay. You see, when you're retired and you have a fixed income, you really don't have a lot of wiggle room in the sense of your buying power and how much money you have. So an increase of 20, 30%, maybe 50 or 100% is definitely gonna affect you, especially if you're living within your means. So if you're unaware of this, you definitely need to keep your eye on this. If you're on the association board, you gotta be vocal and talk about this and make sure that you're handling this before 2025 comes around, because if not, you're going to be in for a very rude awakening and you're probably going to see a very big bill. Even if your building is brand new, you're still going to be required to have a reserve study done. That's going to be done every 10 years. I'm not concerned for the newer buildings. I'm more concerned for the buildings that are built in the 70s, 80s, 90s. I'm more concerned for those people because they've been in their buildings for a very long time, and this is going to become a very big nightmare situation for them, unfortunately, if they're not ready for it. I hope it doesn't. I hope it doesn't present that issue, but it's going to be a very rude awakening for a lot of Florida residents here. It's definitely going to create an affordability crisis, in my opinion, but we'll see what happens. It's good and it's bad. It's going to be good for a lot of things. Especially for people who are looking to buy. A lot of banks require that there are reserves in these associations to lend, because the bank looks not just at the unit, but they look as the building as a whole. So they're gonna see, hey, this building has reserves, they're well capitalized, they have the means to pay for anything that comes about, so we can lend at a lower rate. But these other condos and these other associations are not being well managed right now. Unfortunately, a lot of people have to put 20% down, 25% down, because the bank is fearful that if something were to happen, they're gonna have to basically foreclose on this person, and they don't want to absorb that risk, and they don't want to foreclose. Banks do not want to foreclose. They want you to keep paying that steady interest payment to them. So if this video provided some light made you more aware of what's going on in the market, please drop a comment down below, like, share, subscribe. And if you want to talk about anything in the real estate market, I love making these videos about this because South Florida is changing so much, and Florida is a general. So thank you for your time,